Alrighty, good afternoon, guys. What's going on? What a day! Another one, 2 days in a row. Certainly seeing the all-time high, at records, sort of influence on demand. Um, Today was sort of a, let's put it, if we look at mega caps, those that did well yesterday took some profit, and then again, those three, Microsoft, Google, Facebook, all doing very well yesterday. And then instead today, Apple and Amazon really did well, picking up sort of the slack there. This helped obviously with the average a lot more. We can see it with the Nasdaq, the the difference between having Amazon and Apple also put points on. So Nasdaq is getting there. The trend's continuing. It looks a lot different compared to the S&P chart as it catches back up. The Dow was really just completely flat today, broke even. When we look at our two benchmarks, banks and energy, they did well though, right? Energy up 1% on the day. Banks, the usual pullback candle, but very big. Looks like another just a step in sort of the trend, and so sectors all looking very good on the value side. So those do continue to trend. Nothing to really see there. Obviously, the all-time high action leads more to tech and then to the tickers that we've been talking about as sort of the meme economy. It's sort of changed from day to day. So today, if you look, we had things like Kodak put the move on today, right? And again, all that we need to know about the way in which retail's trading is that they're trading everything. They're willing to buy anything, and it's not just sort of in one place. And so, I looking through some of the moves. These are it's a lot of it's a lot of points. That's what needs to be said is yesterday was a lot of points. Today was a lot of points. It's willing to pay any price. And we saw this last time in January that people are willing to pay any price. Things like VLDR coming off support. Yeah, we have an expectation for these moves to happen, but it happens in an instant. We're instantly pricing things, right? And as we go through things like STC that we know is volatile, and when we get a breakout, we know something's going to happen. It trades through a range very easy, 15% on the day, right? SFIX, we talked about it yesterday. Retail stores themselves, like again, consumer apparels, everything else, putting points on. You continue to go through the list. Anything that's breaking out continues to put more points on just from, again, this sort of momentum focused retail buying and willing to pay any price, right? And so through even, again, when we get to more things like triple BY and actually into the tickers that have been making moves, they made very similar moves. Things like space continue to put points on. There's no sort of exhaustion here when you look at the candles. Look at like the space candle here. Is that exhaustion? No. Looking through more, they all look very similar. We don't really need to see too much, but it is important to see the charts and see how these are. This is the same trade. They're all the same trade. The more you look at these charts, the more you realize that these are the same trade, right? Let's take it. Yeah, people fucking going nutty in New York right now. Let's take it over to AMC here and take a look at what's happening. You have tightened once again today, and so we are at a point again of asking a question on a ticker like this. Are we breaking out to the upside tomorrow, or are we breaking down? What's more likely, right? What's more likely? Well, it's more likely that you continue the trend that you're on if you're on this sort of move, just like we've talked about with things like Bitcoin, right? What happened with Bitcoin? Well, we talked about this tightening into the apex. What's more likely? That it's going to continue the downtrend that it was on previously. That's what Bitcoin did today, right? And so when we look at a move like this, we saw that overnight into this morning, that's exactly what happened. You had the breakdown. This is an expected sort of move based on this. Again, money coming from crypto, from retail traders coming into equity market. They're willing to buy things. It's happening. It's going to continue to happen. When do you stop? When there's no money left to be made. There is no such thing as no money being left to be made, right? There's not really. The only thing that could stop it is that money doesn't keep flowing in. We know that there's plenty of money. That's why we continue to buy things, continue to push positions, and go long, right? We understand on the things that are a bit more like the meme economy, the meme stocks. We understand that those are much more in and out sort of trades, but it fuels the volatility on the rest of the market, right? And so this continuing to show us here is an important factor. As gold continues to go, the rest of commodities start to go. The one note I want to make here today is that yields were at basically the lowest point that we've seen in a while, and this is uh, again showing like a balance that we haven't seen. And I just talked about it yesterday that we saw the bets uh, on this side of things coming through, and I should have said the other way. It's bets again that there was going to be bond buying. I said yields yesterday, I believe. There's bets that there's going to be bond buying to whether we want to call it balance portfolio since we've sold so much in bonds. It's hard to say. It's again due to the nature of buying riskier stocks. What do you do when you buy riskier stocks? You have to hedge them. We've talked about this hedging value with growth and growth with value. There's only so much that can be done there. Bonds are still a factor. There you go. There was some buying today on that side of things. There's still a lot of room to sell. Of course, there's not a limit, let's say, on how much bonds can be sold. The Fed is still within that market and is going to do whatever is necessary. So it's not clear what the dynamic is between the all-time high and this time around not caring about the repercussions, I guess you could say, of inflation. Again, every single time we have a positive day, it's, oh, investors no longer care about inflation. And then when we have a down day, it goes, oh, because of inflation concern, we sold in the equity market. Again, it's bullshit. Who cares? The dynamic doesn't matter. None of these things are really the impact here. It's about making money right now. The market is giving us points to be made. You have to be in, or else you're not making money. Another day with just, again, opportunities everywhere. It's not important to capture all of them or something like that. It's the point that there are trades out there that can be made at any time, and you have to just make the trade, right? As long as you make the trade, you're going to be able to capture points. You can pick the wrong stock. It's going to happen sometimes. It's a lot harder to pick the wrong one if everything is going up in the same sort of way right now, right? And so when we look at things like bios from yesterday, right? A lot of those continue today. When we start to look through the list, you're going to see most of those continue today. Did not take much profit. Things like retail stores continued to trade. Things like travel continued to trend up to the upside, right? When we talk about some of these things, these are trends, right? Higher lows, higher highs. Doesn't matter if the points were not put on in the day. It's about the trend. That's what those trades are. And so starting the week off very bullish, not negatively reacting to, again, the retail sort of dynamic that's going on. It's important to note that most of them do look like they're going to continue. Again, I think AMC sort of being the spearhead of that. There's just this overall sort of demand for everything. And the more you look at some of these, let's just say, tickers that have been at the low, even though the rest of their sector has been very bullish into the upside, sometimes all-time high, they're very buyable. Things like Apple and Amazon, there's a reason to believe that anything that gets taken profit on some of those more meme ideas would be thrown into here, especially if it's from an institution. So there's still, I would say, a lot of points to be made from this rally we're within right now, whether it's just for this last week or so or for another week, whatever it's going to be. There's a lot of reasons why the risk on mentality should continue and why we should continue to be sort of hunting and hungry to push those. The really big factor there being, as you take profit on something, getting back into it, doubling down on it, however you want to look at it, is such an important factor here, especially when you get a gain that's very large. So if you were a part of any of these moves here, it's really important that as you take profit on this, you continue with the trade, right? Something like SDC here is probably like a good example how, okay, you get the points here immediately. You probably took profit on that because, again, with contracts, it's a little jaded looking when you get something like 1,000% return because it's not, you didn't put much capital on it. It's important to continue those trades, however, in whichever way you can, right? Otherwise, you're not actually capitalizing on the fact that it's making a move, right? And so it's going to be probably a lesson this week for some of these charts. How do you continue to gain on some of these if you're dicking around with them? And then also on your other side of things, like if you're trading things like energy, how can you keep patient and just continue to push this trade without feeling like, okay, well I've got quite a bit of points here. Let me go take some profit here and go put this into something that's a little bit more of a joke, and I possibly can get rich quick sort of scheme. Uh, we know that right now it's all about portfolio management, risk management, right? And so it's so important to again keep those long positions going and understand that we are in a short-term sort of spurt, and what's actually happening right now is due to the fact that we're trading everything in a longer term, slower manner, right? Everyone's forming their portfolios. We're still discussing what inflation means. We're still waiting for numbers. There's a lot of things going on with, again, policy, and we're not exactly sure the timeline. We're in a lull period. We just talked about it. We're in this lull period waiting for a lot of things. So we're positioned in a certain way. It's this sort of draw of attention to these more again volatile short-term situations that makes things look a little bit hotter than it really is. It's important that we're a small piece of that pie, right? A very small amount of your money should be dedicated to this volatile sort of season we're in. And of course, it's I've talked to some people and they say, it's like we did last year. We call it crazy, or this is just not normal trading, and this is silly, stupid. It's crazy not to trade it. That's the reality. It's crazy not to continue to trade in it. And so uh, I would say that if you haven't sort of gotten involved with any of these trades, whether it's an actual known meme stock or whether it's just somehow tied to it, right? Something that's volatile. Anything on this list that's above 5% or something, right? And you don't catch immediately, but you see the momentum going, I would say go take a trade on it. Go take a trade, watch it, make sure again that you're being careful about downside, and go snag 100% from it. Someone else is going to buy it. Right now, we know that we're not cooling off or anything. When you look at the sell side, there's really nothing going on the sell side other than take profit from big moves, right? And so it's important that we realize that the probability is on our side to continue trades. It's just how in which we do that and not being too greedy, right? And so I would say we've got this whole week to continue to play around with the dynamic. I think AMC again will give us some viewpoints on exactly what this trend looks like. Because if it breaks out of that tightening, then I mean, again, we're gonna have quite a bit of points coming through on that. So again, continue to be aggressive and realize that we're still at all-time high. It looks like S&P is going to all-time high most likely tomorrow. We've been touching it every single day. This intraday action, it's pretty easy to follow. I think even though I wasn't here this morning, I'd imagine that most of you were thinking all you could think about was whips from the open. That didn't happen, and then coming into lunch, a very similar sort of tone when you get a very long sort of shadow like this. I talked about yesterday the coming down to support and how we were actually looking for it to come into support yesterday. That didn't actually happen. And so we still have actually support at that 420 level. If you remember, just the week prior, we traded on that level a lot. And what does that sort of signify? Building a level, right? We actually created a lot of support from the trading last week. And so it's important to keep that into mind, how we have this range of 420, which is a great number, up to the all-time high, right? Which is a very small range. Again, when we look at sort of this 420 up to really the all-time high we put on today, it's a very small, about 0.5% range. And so if we even traded sideways through this, which is very unlikely to happen, it still would continue the demand through, because again, we don't have much supply up there. There's no one selling anything here. There's nothing to really, you're selling into buying, so it doesn't feel right. We sell into buying when you are sort of peaking out of a top, right? And when momentum and upside has already been created, we're trading along a line right now on the average, which most charts are following. If again, the only thing that's really not doing that are some of the ones that are coming from a low. those meme stocks are their own thing and they don't affect the average anyway. Those bios do not affect an average. So most things are trading in this range that beg to be bought and continue to push. And on options, you are absolutely continuing to get implied volatility. The volatility is going to continue to increase. And this is, again, the dynamic between January and right now that has not been fulfilled is that in January, this is the January VIX chart. It's identical to those meme stocks and to a lot of moves that we saw, even retail stores, right? When we traded through here, go look at the Macy's chart. Looks like this. Looks like the spot VIX right here. January 28th, this. We're not there. And it technically is there in our minds. We understand that this is volatile. And so what this means for options is that we are in a spot where volatility should increase. How do we trade options? We buy low volatility and trade it to higher volatility. The premium level is the IV. That number right now is still low. What should happen? It should go up. Based on just fucking math, it should go up, right? There's no sort of factor there involved that blocks volatility from going up because not everything can stay at a peak, right? It's not about being overbought or oversold. It's the fact that it's everything together, which again is the important point. It's not one ticker, it's everything. If everyone is buying things together, then what's happening? Everyone has the same understanding of volatility. We all expect things to move in a similar way if we're all doing the same thing. That is not going to be the status quo. Things will change. There will be an understanding that flows are going to change. The dynamic will go from, again, what I believe will be a selling of those short-term volatiles into the long-term tech, right? Or into whatever else anyone wants to start buying instead. That should harness this idea of volatility changing, which is what you bet on with options. You're betting on more volatility later on. We're already pretty volatile, but the market doesn't say so, right? That's the important factor. The market right now is pretty chill. Look at this spot VIX. Again, I don't think this number is correct, but that's what the market believes, right? That's literally what the market believes. We're trading here and no one cares. It's important. Again, you start to read articles that say, well, this is like the calm before the storm or some shit like that. Where's the foundation of that? Where's the foundation? Show me the price. Show me the prices that show that that's the case, right? Show me how there's not enough money, right? There's no sign like that, which we know how to find and how to watch out for, right? When there's going to be an issue. It's not at this point that there's an issue. Remember when we were losing our mind over here? We were about 2% from all-time high. Yeah, that's a different. No, you shouldn't be losing your mind here either, right? This is a sort of everlasting trend right now. What's going to change is, again, the Fed dynamic, the policy dynamic, and their interaction with what it means to basically be in this inflationary trade. There's not going to be sort of a stop in any of that in a surprising way. So if these things continue, this trend continues, what changes is, again, what's being bought in the flow in which it's happening. These short-term volatile trades are what's changing, not the long-term. So again, you could just sit in the S&P, sit in, again, the SPY-D chart I have, and you could just sit there for probably the next 10 years and nothing would happen. That's just where we're at, right? What we're trying to do is, again, take advantage of every time there's a dip, buy it to swing it up to the upside. Right now, we're not in a dip. It's a little different, right? We're not even having, we don't even have to ask the question of how do we buy the market on a dip right now. We do when there is one, like when yesterday, right? Until that happens, right? Until that happens, we continue to look to the upside, not the downside. What's more likely? Upside, right? And every day that you're not in the market is the day you're not going to capture the gain. Just like, again, today. Look at the charts. If you were in any of those charts, you were like, oh, well, nice. I just gained 10% today, and I have no idea why, right? It's just because people decided to buy it, right? People decided to buy it. And so the more we can be in, really, the traders that are able to spread out are the ones that are catching a lot of these gains, right? Unfortunately, I've sort of changed my strategy. I'm not buying 100 different positions anymore, which is for my own sanity. And for most of you as well, you're never going to do that. But those traders that are doing that are obviously profiting the most. You're able to capture, you're capturing a lot more fish, right? It doesn't matter though. As long as you're observing and in part of the market, you're going to catch them. It's very hard not to, right? And so the market's bullish. I don't see anything from the Bitcoin side hurting the market. I think Bitcoin is going to have some trouble. It seems like there's a consensus right now that that's going to be pretty weak. When we just compare it with things like the dollar, even the dollar's it's not even really consolidating. It's just holding a support. If the dollar is going to be strong through here when we have significant buying on the equity side, then even this is stable. If the dollar is more stable at this level than Bitcoin is through that other level, then you're going to have some problems because Bitcoin's already more volatile, right? And we have an expectation the dollar's going to go down. It's even worse when you know Bitcoin's going to keep falling, right? And it doesn't just go down, barely 1 point like the dollar. It goes down a lot of points, right? But I don't see that having a factor on the rest of the market or risk appetite. In terms of what comes up at the end of this week, we have a big Thursday. We are probably going to have a very slow day tomorrow, if not a kind of troll day that melts through all-time high. So if you have things that you have a lot of points on, tomorrow I would say is the day to do it. I would be taking profit on things tomorrow and looking to set it up for Thursday on those charts in which, again, you've put points on. I would say things like Microsoft, Google, Facebook. If you are in these trades right here, you really want to push these, but these are the kind of charts here that will have a more severe sort of negative reaction to things that come through on Thursday, I would say. I want to be bullish and long on these. I'm just saying in terms of transitioning, it makes sense on charts like this, right, that are already been trading through all-time highs. I would be looking at these, if you're in them, as the most sort of extreme need of transitions, because these are the kind of ones that all of a sudden market opens and you can't get out of the position. Because again, there's news trading happening with everything that's happening Thursday. Also, things on the consumer side are most likely going to be in debate about whether the CPIs are good for them. This again goes to things like the retail stores, things like what we've looked at. Anything that's got the name consumer in your sector, just look at it. If it involves anything in the economy, look at it. See if can I really push the risk through Thursday? Maybe I should take profit before Thursday and put the trade right back on Thursday morning, right? Put a new cost basis on Thursday morning. I would be careful about it because again, we've really rallied here, and it doesn't take much, right? It doesn't take much of negative news to take it down just for one day. You don't want to lose all your gains in one day and then have it keep going up, and then you feel silly because you sold at a low and then it went past you. So I would just think about it because again, it's something that's there, and without this trend really continuing, let's say in a rallying sort of way, then things are still going to be sensitive due to those economic CPI numbers, right? And so think about transitions tomorrow, especially if we see a slow day. I will be here in the morning tomorrow. Wasn't here this morning. If we see a sort of break-even day and we're not able to go through all-time highs, then most likely we do have those rotations going on in the same way we're looking to do. So we'll be careful on that. I am going to put some of my own expectations for CPIs tomorrow out as well, and we'll see and compare and see what we get for that, because again, we've seen some terrible expectations by economists, and that's again a sense of volatility that may occur on Thursday. Is that what if the expectations are completely off? Do we have any clue really what's happening if that's the case? The economists are the only ones that really set us on a path. That's something to keep in mind, and that's why we want to transition, right? So we'll talk about that tomorrow, what to expect. Otherwise, a fucking bullish day, guys. I mean, this market is really cooking, and I think we're really just getting started in a lot of it. The meme stocks are their own thing. We have a lot of bullishness to still go on the broader market. So I'll see you guys in the morning. Enjoy your night, evening. I will have charts up tonight. Didn't really have anything to yesterday. It was just all the charts we looked at were fucking up yesterday, right? They were just all up yesterday, so there was nothing really to mention other than that there's a lot of green. So see you guys in the morning. Enjoy.